Hello and welcome to Quartic. This is episode 5 in our series, CFA Level I, 10 Topics in 10 Weeks. The topic for this week, topic number 5, is corporate finance. Corporate finance accounts for 10% of the exam and is actually a relatively easy topic when compared to some of the other areas. You'll find that a significant proportion of the content comes from quants and FRA. As such, you may spend less time than planned on some of the readings. The first reading is Corporate Governance and ESG. Overall, it's a very wordy reading, but it's an easy read. Lots to memorize, so things to focus on. Start by understanding what corporate governance is all about. Essentially, it's the systems by which companies are managed and controlled. You should be aware of its development over the years, and also note that it's not standardized internationally. Be able to list the different stakeholders and their conflicts as well, and know how stakeholder management is defined and implemented. Also know the alternative structures of the board of directors. List their functions, including all the various committees. Be able to describe the various factors that affect stakeholder relationships, and know the pros and cons of good versus bad stakeholder management. You should also pay attention to what analysts should consider when assessing a company's corporate governance, and be able to describe the various ESG factors and how analysts can actually use these when making investment decisions. Capital budgeting is next. A lot of the computations in this reading, especially the ones on NPV and IRR, should be familiar from quants. So you should therefore spend your time learning the basic steps in the capital budgeting process and understanding the pros and cons of each project appraisal method. Now, don't forget that the exam questions are mostly analytical rather than calculational. You should therefore understand why NPV and IRRs can sometimes give conflicting rankings when we're talking about mutually exclusive projects. Be able to calculate and talk about payback period, discounted payback period, and the profitability index for projects. The next reading is the cost of capital. Now, at this stage, you should really be aware of the various sources of capital for a company. So this reading looks at calculating the cost of debt finance, the cost of preferred equity finance, and the cost of common equity finance. And it culminates into the calculation of the company's weighted average cost of capital, or what we call the WACC. Now, in the reading, you will see that as more capital is raised, the marginal cost of capital typically increases. So you should therefore understand the shape of the marginal cost of capital schedule and be able to calculate and explain break points. Next, we have measures of leverage. Take some time to understand the difference between business risk, so that's risk associated with the business's operations, and financial risk, which is influenced by the company's use of debt finance. Also be able to explain and calculate the degree of operating leverage, the degree of financial leverage, and also total leverage. Understand how leverage affects return on equity and be able to calculate break-even quantities. The last reading is on working capital management. Quite a lot of the content within this reading should be familiar from financial reporting and analysis. Pay attention to the definition of liquidity in this reading. So it's the ability of the company to settle its debts as and when they fall due. Liquid assets in this context would represent cash or assets that could be easily converted into cash. So when you think about your current assets, inventory, receivables, and cash, know that inventory is the least liquid current asset. Also be able to calculate things like the current ratio, the quick ratio, the operating cycle, and the cash conversion cycle. Look at how the management of the cash conversion cycle is done. Note that in managing your cash conversion cycle, that's done by looking at managing receivables, inventories, and payables. So you've got to learn the various methods available for doing so. That's it for this week. Thank you very much for watching. As per usual, for free access to Quartic Online, please get in touch by using the details on the screen. Also, you can follow us on Twitter @Quartic Training for access to more videos and useful resources.